Welcome back to the Diary of a CFO podcast, the podcast where finance leaders share the lessons, challenges, and wins that shape their careers as well as their organizations. This episode is brought to you by Zenskar, the AI-powered order-to-cash platform built for modern finance teams. With Zenskar, you can automate revenue recognition journal entries as well as billing, collections, and SaaS metrics. Visit zenskar.com/upgrade to learn more. The link is also in the show notes. I'm your host, Wasia Kaman, and today I'm super delighted to have with me Apurv Bansal. He is the co-founder and CEO of Zenskar. Prior to Zenskar, Apurv held leadership roles at Google, where he experienced the billing and rev rec pain points firsthand and realized the need for flexible software that can automate and simplify this. He took this as a mission and built and scaled Zenskar to streamline billing and revenue recognition at the highest level today. Welcome to the show, Apurv.
Thanks for having me, Vasia.
Awesome. So why don't you start telling us about your journey and all the twists and turns along the way and what brought you to where you are now with Zenskar?
Sure. Yeah. I started my career at college was an engineering degree. So I'm an engineer by qualification.
Okay.
After studying engineering, I realized that that's not what I wanted to do for a living. So I pivoted in my career. I did management consulting for a couple of years. I was at Bain & Company. I was 22 at that point. I felt the itch to start a company. So left my job and started an e-commerce company. Ran that for a few years, eventually, sold that. After that, decided to do my MBA. So went to Harvard Business School, after which I went to Google. I was there for a couple of years. And that's kind of where I kind of closely experienced the pain points related to billing and rev rec that we're now kind of solving with Zenskar. So that was kind of a tipping point in my journey. I did work with a VC firm after Google for a couple of years. I was investing in fintech SaaS startups. By then, I realized that, I wanted to be an entrepreneur again and solve the problems that I had seen very, very closely at Google, because I saw how much time it was draining for finance teams, despite, having all the engineering resources that a company like Google has. That's what kind of led to the birth of Zenskar about 3 years ago.
Wow, that's awesome. And it also puts in perspective, right? We think that when you hear the name Google, everything is perfect. Like we think that when it's only a small company problems or a medium-sized company problems when you think about billing and revenue recognition. So what was that moment for you where you were like, something like Zenskar need to be created?
What I've seen was, that, there were, and again, this is not specific just to Google. This happened at a lot of companies. Companies build in-house tooling to automate billing, rev rec, other financial operations. The reason they build in-house tooling is because third-party tools available in the market are not able to capture or automate the custom use cases that a company might have. And then they feel the need to build something in-house. They dedicate engineering resources to building these tools. What I noticed was that despite having the best in-house tooling, finance teams were kind of spending a lot of time just still on spreadsheets, whether it came to, sending invoices or following up for payments or recognizing revenue. And the reason for that was that, sales teams, obviously they get creative to close deals. As sales teams go and close more deals, the in-house tooling that was built is not able to keep up pace with how sales team want to structure their deals. And that then kind of puts the onus on finance teams to get the job done through spreadsheets or manually, because at the end of the day, you have to send out the invoice at the end of the month, whether you can do it through your automated tool or you send it out manually. That is the headache of the finance team. This is the era of AI where, cars drive themselves and, you have robots doing pretty much all kinds of stuff. And here I was like, why are people still kind of sending out invoices manually? The reason that was happening was because most of the tooling that existed in the market was built like 10, 15 years ago in an era where software pricing was more per user per month, per seat per month, or even like a more straightforward license fee. As software has evolved, with the advent of AI, there's more consumption-based pricing. With sales-led notions, you have all kind of, fancy ways of structuring contract, whether it's discounts or tiers or ramps or milestones or, early payment rewards or late payment. We saw a gap in the market when it comes to having tooling that can tackle these use cases and automate billing and rev rec. So that's kind of what led us to start Zenskar.
Okay. And so what part of billing and revenue recognition have you automated with Zenskar, right? Because when we think of SaaS company, especially when 606 came in, the accounting standard about revenue recognition and all the milestone and you get money, doesn't mean it's revenue. It's quite complicated.
Yeah.
So which part were you able to automate?
The end to end. So basically, our vision was that all we need to know is what is the contracts signed by our customer with their customers. I'll go back to the example of Google. Let's say Google was using Zenskar and Google had to send an invoice to their customers. Google had to recognize revenue based on the contract signed with their customers. All Zenskar needs to know is the information in the contract. This is a contract signed between Google and their customers that determines how their customers pay them, whether it's a subscription fee, it's a, tiered fee, there's a discount. Along with the contract, there could be some elements of usage, how much data was stored, how many API calls were hit, how many emails were sent. As long as Zenskar has the information in the contract and information about usage, everything else downstream is automated. The generation of invoices, the sending of invoices, the application of payments, the sending of kind of follow-ups for payments based on the contracts, on 606 or IFRS 15, creating your revenue schedules, recognizing revenue, creating your journals, creating your journal entries, posting your journal entries into your ERP. That end-to-end process is fully automated. Again, the vision was that we live in an era where machines can do pretty much anything. So this entire function should be able to run by a machine using AI. Now we are an AI native platform. We use AI in every part of our stack. All we need is the information on the contract and the information about usage, and everything downstream is fully.
That's awesome. And it brings me back to, I know this is a great tool, and I know you talk with a lot of CFOs, right? And we often come in and we either inherit a great tool that was now well implemented. The thing can have all the good thing it can do, but the implementation is it's like you buying a Mercedes and you're driving like a golf cart. It's painful, like you said, because sales team go out, they do deals, and accounting and finance, we're trying to catch up. So what would be your, maybe your framework or your advice really for implementing any tool and make sure that we're using it to its full potential?
Again, we've done countless implementations, so I do have a few lessons to share. I'd say, first of all, just knowing exactly the entire, like getting all stakeholders in the company on the same page about, hey, we're implementing a new tool, whether it is, the sales team, whether it is the engineering team, whether it is the finance team. Implementation should not be done in silo with one team. Others should be kept in loop from day one that, hey, this tool is coming in. Understanding everything that the tool has to offer, not necessarily using everything that they have to offer. You could choose to use a few specific modules, but at least knowing that, hey, this tool can do these 5 things for me. And internally, all stakeholders aligning on, okay, we'll start with using module number 1 and module number 2. Let's say you're using Zenskar. You want to start with billing, start with rev rec. You don't want to use collections today. You don't want to use, reporting today. That can be a phase 2 or a phase 3, or you may choose to never use that. So just having full clarity on what the tool offers and what different stakeholders within the company expect from automation. The tool could offer, let's say, an integration with your CRM, which is HubSpot or Salesforce. But if the sales team tells you that, hey, the CRM hygiene is not very good, I don't have information in a good way or shape in HubSpot or in Salesforce, then the finance team trying to get Zenskar connected to the CRM is just useless. It doesn't make any sense. You might as well just have the PDF of the contract, upload it to Zenskar and have that kind of read it. That's why it's important to have all internal stakeholders aligned on, what data do we have, where does it live, and making sure the vendor that you work with gives you like a detailed implementation plan broken down by phases on what will happen on day 1, week 1, month 1, how long will it take, what are the different phases, what is needed from different stakeholders in the company at what point in time. Doing all of this takes 2 to 3 days. It gets different stakeholders on the same page. it saves so much headache later, because we've seen cases where, the finance team starts implementing the tool and they'll be like, you know what, you can just extract the consumption data from my Snowflake. They've not spoken to engineering. And then 3 weeks later, engineering says, you know what, we're not going to give access to the Snowflake. Even read only access will not be given. We need to use the APIs to send data. And that increases the implementation timeline because they were not looped in on day one. So getting everybody looped in on day one is very, very important.
I love it. I love that approach because I can see how it prevents a lot of headaches. I've seen, and I feel like we all learn implementation the hard way. Now, you have an engineering background. How do you think it really helped you coming into making the lives of finance people easier?
Honestly, the engineering background helps because I understand the fundamentals of technology. I understand how the software works, the intricacies of it, not just what outcomes it delivers for the end user, which is, somebody in the finance team, but also how the software works under the hood. So when I'm in a conversation with somebody and, they're like, hey, can you get data from this stable in a warehouse and can it be aggregated in a certain way? Or, can I have my revenue distributed based on usage, or can it be more straight lined? Given that I understand how the tool works from an engineering perspective, the ability to connect the how, which is the tech layer, with the what, which is the outcome that is being produced, which is the invoice or the journal entry. There's no disconnect because I understand both of those parts, and thereby, I'm able to kind of marry those two and give a very solidified, holistic perspective to the end user.
That's awesome. And I think in addition to you coming from an engineering background, you also come from another country that's like the top in how many engineers per, I think, per square mile. So what was that transition for you? I'm curious, coming to the US and learning, because you knew already the engineering, but the working with people, because that's what finance business partners are today with AI, with so many things. The hard work for us is more and more becoming dealing with people. So, what is your take on it? What has helped you in bringing people on board with AI, with different technology, and just work in general?
Yeah, I mean, I think it just boils down to understanding the culture, which I came to the US for my MBA, which was about 9, 10 years ago. So at that time, of course, there was a little bit of a cultural difference, but I made good friends with all of my classmates at business school, understood the cultural nuances, understood, how what people like, what they dislike, how they talk, what they like to eat, where they like to go, what music they listen to, what sport they watch. And as I kind of became more ingrained with the culture, it helped me kind of build a rapport. Honestly, it wasn't that hard because the cultural differences aren't that significant. It didn't take that long to kind of assimilate. It was only maybe like a few weeks, a couple of months here and there. Now, obviously, you mentioned AI and getting people on board with AI. There's like a mixed bag. Some people like want to incorporate AI. Some people are like scared of AI, not just because of, okay, it may eliminate jobs, which it is, but also, how safe is it? How secure is our data? Is our data being used to train models? Once you understand what people think about the latest technology, what they're looking forward to, what they're skeptical about, especially what they're skeptical about, which could be security, privacy, elimination of jobs, accuracy, and knowing how it works under the hood, you're able to kind of paint a true holistic picture of, okay, your data will be used in so and so way. It's going to be used to automate your workflows, but it won't be used to train a model that's helping to automate somebody else's workflows. And the data is not being exposed outside the environment that's meant for you. It's safe, it's secure, and just understanding people's apprehensions and understanding how technology works helps you alleviate those apprehensions much better.
Yes, yes, definitely. I like how you said understanding, but also it means being open, right? Because when we think about the modern CFO tech stack, we used to what? Having an accounting system, maybe a FP&A software, and we should be good. Well, in reality, it's a bit more complicated than that. Like, what has been your experience, and what do you think the ideal CFO tech stack should look like?
See, I mean, the CFO tech stack can be as fragmented as you'd like it to be, and or you could consolidate everything in one place. I feel like it's hard to consolidate all the functions into one tool. You do need specialist tooling for different functions. So whether it's your quote to cash, which is where Zenskar comes in, whether it's, let's say, your receivables function, you need a tooling for FP&A for planning and forecasting and reporting. You need an ERP, of course. You need a payroll provider. You need a expense management tool, a payables management tool, of course, a closing tool, tax. There's like tools for it's so easy to spin up a tool today. There's tools for literally every part in the function. I think the ideal stack varies for every company. It depends upon the stage of the company, the maturity of the company. You don't need to automate everything. You should automate things that are becoming a pain to do manually. Automation is important, but not for everything until it becomes a pain point. So it's important to understand, okay, these are the different parts of the stack. What are the key pain points for me today? Like, is my business is growing, the volume of customers is increasing. I don't want to run billing manually. But if you only have 10 customers, do you really want to implement a billing tool? You can, and let's say they're all on annual invoicing. You could send out 10 invoices on email. It takes you 10 minutes. You don't need to automate in that case. So it's very contextual. But say the various parts of the stack. And today, I think the one other fundamental question is how much of AI should I be using in my tech stack? AI is evolving so rapidly. The pace at which things are changing is so transformative that what you have today versus what you have in a year will be so different. So you want tools that are AI native and are using the latest technology to make sure the business is future proof. Because if your competitors have an edge over you, let's say you're using outdated tooling and your competitors are using tooling that helps them do a lot more with the same amount of headcount and the same amount of investment in tooling, that they're going to kind of be more productive than you and they can do a lot more. They'll move ahead of you. So that's why it's also important to have, so if I kind of broke it down, code to cash, of course, there's Zenskar, FP&A, there's tools like Drivetrain, there's Mosaic, ERP for SaaS companies. Of course, you have the QuickBooks and the NetSuite, but you also have the more wage, campfires and rivets. Closing, of course, there's tools like Flowcast. Tax, you have Avalara, but you also have tools like Androg that are more kind of SaaS focused. Yeah, again, it also boils down to kind of figuring out what parts of my stack do I want to automate, but also what parts of my stack do I want to eliminate. Like you may have a manual close checklist that could be eliminated. You may have static board decks. You don't need static board tests anymore. Those could be eliminated.
At one point, you talked about AI native. What is the AI native tool? What does it look like? What does it do? Why is it valuable?
An AI native tool is a tool that leverages the latest in AI to solve the same problems that you have been solving for decades, either manually or through more legacy tooling. An example of that would be, let's say you're using a billing tool where, let's say you're a company that sells contracts that has a sales led motion. Your contracts are not in a CRM because your sales team has poor data hygiene. Your contracts are in Google Drive. You have 200 customers, you have 200 contracts in a Google Drive. Let's say you implemented a billing tool. Now, if the tool was not AI native, you would have to open every contract, read the information on the contract, and manually punch it into the billing tool. And once the contract is in the billing tool generates the invoice. So this is an example of a non-AI native tool. An AI native tool will solve the same problem, but instead of you having to read the contract 200 times and manually punch in the data, you can upload the contract to the AI native billing tool. It would be able to extract the terms in the contract, read them automatically using AI, the latest in AI, and then generate your invoices. So again, you're solving the same problem, but with the AI native tool, you're saving more time because AI has now done the job that you were doing of manually inputting data into the tool. That's a very small example. But what I mean by an AI native tool is it is leveraging AI to solve a lot of the manual workflows that still exist despite you having to use software. Another example could be, let's say you are again having a billing tool, you wanted it to kind of reconcile which invoices got paid and which didn't get paid. Now you connect it to your ERP, the ERP is connected to your bank. It tells the payment information syncs in, and now you have to kind of manually apply the payments to every invoice to see what is paid, what is not paid. The AI native tool will take away that manual step because it will be smart enough to understand who the payment was came in from. Let's say I have three invoices for a customer for $100, $150, $200, and there was one payment that came in from that same customer for $450. AI is smart enough to know, okay, this $450 is for those three invoices. So let this, apply it as opposed to you have to do it manually. So that's what I mean by an AI native tool.
Oh, great. This is very helpful. And in terms of company maturity, you said something about how, depending on where your company is, you will decide to automate certain things, right? When you think about a SaaS company, because I know you work a lot with SaaS companies, at which point do you think they should focus? Like when you look at their maturity curve, when they're starting and when is the peak versus when they mature, at which point do you think they need to automate certain things in that cycle? Like what things typically become a pain point so people can also be proactive, so that the CFO that are, let's say, at a startup, how can they be proactive knowing that they will need different things at different stages of their companies?
Yeah, I mean, I think the best way to do this is just to see what is starting to become a time sink, and whatever is starting to become a time sink, instead of waiting for the problem to blow up before you automate it, you kind of proactively take that action immediately. So again, let's say, again, it's not just a function of company maturity, but it's also a function of some other company nuances. Let's say, you had two companies, both had 200 customers. One company had every contract just like a flat annual fee, recurring revenue yearly. Now, for them to recognize the revenue, all the 200 contracts were just kind of straight line over 12 months. There's no fancy distribution happening over there. So they probably don't need to automate it until the number blows up to, say, 500 customers, because it's not taking that long with even 200 customers. It's the same rule, similar spreadsheet template. However, if you had usage-based pricing, now you have to recognize revenue based on when the usage happened. And now the rule based on which the revenue has to be distributed or recognized is no longer the same for every customer. You have to marry it to the consumption data. This can become a pain point at even 50 customers, forget 200 customers. So you have to then start to automate it much sooner. So it's not just a function of company scale. It's also very nuanced based on, the company's business model and the company's pricing and the company's go-to-market motion. Is it more sales-led? Is it more product-led? Is it hybrid? Is it across multiple geographies? Is it all local in the US? The closest proxy to me is, okay, which of my functions, whether it is billing or collections or recognition of revenue or, reporting or planning or budgeting or forecasting or payments, which of these is progressively month on month, the time investment is increasing significantly. That starts to tell you which of these needs to be automated sooner than later. But yeah, realistically, I would say, companies, they automate billing before they automate RevRec, because RevRec is more internal, billing is more external. You want your invoices to go out on time. If you recognize revenue 1 or 2 days later, it's still more internal. I can live with that. So those are the kind of factors that come into play when deciding when to automate, what to automate.
I love it. It's very simple, very practical. So thanks for sharing that. But I love the way you understand the pain of doing revenue recognition after the fact. Okay. So some of our listeners may not understand the complexities of SaaS companies when it comes to revenue recognition, right? Because I feel like when I was going to school, a lot of the examples in the textbook for accounting was a manufacturing company. You were selling a pen. And so when you sell the pen, you get the money, you recognize revenue, big deal. But for SaaS company, it is not the same. So maybe share a story about what it means to do RevRec in that complicated schedule of you have a customer in the contract there is a usage, there is a customer, or that there is a log. There is a lot of things that can happen. So can you speak to the pain points you probably heard from CFOs going through that, where billing is okay, we're sending the bills on time, and then revenue is like, we don't know. Let's take a quick break to talk about a problem most SaaS finance teams run into. Sales closes a deal with flexible pricing and custom terms, but the accounting system isn't built to handle it. So finance ends up juggling manual fixes, spreadsheets, working with developers just to bill and recognize revenue correctly. That's where today's sponsor comes in. With Zenskar, all you have to do is send your contracts and usage to the platform. The AI-powered platform automates everything downstream: billing, revenue recognition, collections, and SaaS metrics. The best part is Zenskar scales with you, and their team is hands-on every step of the way. So if that sounds like an upgrade your team needs, visit zenskar.com/upgrade to learn more and book a demo. The link is also in the show notes. Now let's get back to the episode.
Yeah, no, it can get pretty hairy pretty quickly. So I'll take an example of a company. There's a customer of ours. I won't take their name, but they have the pricing model is more subscription based, but they also have some elements of usage with every contract. And then they also have this interesting milestone based pricing. The first milestone is when the implementation is over, and then they have couple of other milestones based on when the service is delivered and what phases, phase one, phase two, phase three are different milestones when it gets completed. So they have these different types of pricing, and if some customers could just be on usage, some could just be on subscription, some could be on usage plus subscription, some could have a milestone based pricing. And so they had like 250 customers, and they had this multiple spreadsheets with one tab for every customer. So across multiple spreadsheets, they have 250 tabs because every customer is a separate spreadsheet tab. And now, given that the contract for every customer is different, the way the revenue is recognized for every customer, the template is different, the rules are different. So some of the customers, I think 30, 40 of them are very simple, just like straight line across 12 months. So there was just the same rule. But in some other cases, when usage came in, they had to then get a download of the usage data from their engineering team every month. And then they had to, upload it into the spreadsheet. It was linked to a cell in the RevRec template where, okay, this is the usage that came in with the date at which it comes in. And the rule for usage is, of course, different because let's say the usage happened this month. I have to recognize the revenue for that usage this month. I'm not going to straight line it over 12 months because the usage happens this month. And then sometimes they had, minimum commitments. And let's say it's the contract with a minimum commitment of $10,000. So for 4 months, there was no usage. So I'm just like, taking the minimum of 10,000 and straight lining it over 4 months. And now suddenly in month 5, I have a lot of usage and the usage exceeds $10,000. So now my minimum goes for a toss. And now I have to make a judgment call on, the previous period is already closed. I can't go back and change the way the revenue is recognized for that period. So now for the period, do I front load it? Do I kind of distribute it equally? Do I backload the difference? All those nuances require manual judgment. And each of these is kind of put into a, formula in a spreadsheet. And that just made it a living mess. Like when you saw that spreadsheet, I was just like, holy.
I mean, 250,000. When I think about it, because I've seen how internally the sales team will come up with those great ideas of making it flexible and easy for the customer. You can do this option, this option, this option, but every option is a hurdle, a roadblock for the finance team when it comes to revenue recognition. So how would you say life is being easier between both finance and sales team when they're in sync from the beginning on the revenue recognition and billing?
I mean, if they're in sync, that would mean that, finance has told sales that, hey, please don't go and sell anything outside these types of contracts, because if you sell something that is, let's say finance has created templates to recognize revenue for 5 different types of contracts. Now they've told sales, hey, please don't sell a 6th type of contract. That is what it means for finance and sales to be in sync. That will not work though, because sales has to go close deals, rightly so, to drive revenue for the company. When that happens, finance is happy because revenue came in, but they're also like, okay, now I have a new type of contract that I hadn't created a template for, and I have to go back and create a new template, and it's going to increase the time that it takes me to recognize the revenue and to close my books. But the simplest cases where both teams live in harmony is when there is, not too much creativity happening in the sales process. They have a very set way of selling. Finance has already accommodated for all those ways of selling, and there's nothing new happening in the business. But that rarely happens, honestly. Businesses grow, they launch new products, they launch new pricing models. As you go up market, right? As you go acquire enterprise customers, they demand more creative ways in which they want to purchase. Rightly so. They're paying you a lot of money, so they want to have flexibility. So that harmony is not as easy to find, unfortunately.
Yeah. So I was hoping you would say with AI, it's easier to add that sixth contract. Like when they go and they do 5 and 6 is easier, maybe.
Absolutely. No, so that's why I said AI native tooling like Zenskar makes it easier for sure than if you had to do it on spreadsheet, or if you had to do it in a tool that was kind of more legacy. The point was, there's very few companies where there is this harmony. So given that sales teams will get creative, I think the easiest ways for finance to adapt tooling that does not need them to push back to sales, and they can tell sales teams, hey, throw whatever you want to throw at me. I got it. I'll take care of it. For that, you need flexible, modern AI native tooling.
For sure. What would you say is a recent trend or shift that you think leaders are not paying enough attention to? Right? Because I know we talk a lot about AI, and I feel like with AI came also an increase in fraud and cybersecurity issues, right? Because everybody's getting smarter. What have you seen? How are you staying ahead of things like this?
This is not new. Like every time a new technology comes, there will be security issues, there will be fraud, and then cybersecurity will also beef up to the next level. Like it's a game between the fraudsters and the cops, for the lack of a better word, as to who's kind of ahead in the technology race. With all the changes in AI, of course, there are security concerns. You have to, take a measured approach as to, okay, how much is the risk? Is the risk worth the return that I'm getting? In some cases, it's not, in which case you should not take the risk. But, in some cases, if what's at risk is, let's say, proprietary customer data, you could fear your data being leaked to be used to train some other model and giving away key business IP. That's a risk you cannot live with. Okay, let's say I'm trying to create my board deck. I got AI to do some projections. Now, there's a risk it could do the wrong projections, but it could do it much faster. And that's a risk I'm okay taking, because you know what? It's still more internal. It's a projection. I got it wrong because of a risk that I took. But, if I got it right, I was able to do it much more smartly, much more sooner, with a lot less time investment. And over there, the risk is not less than the return. So that's kind of how I look at the risk versus reward trade-offs.
Okay. It's pretty much a balance and how you can mitigate what comes up. Okay. Last few questions. I will say, what was the best career advice you've ever received?
I'd say one was just like, always think long term. I feel like people underestimate how much the power of long term thinking can help on the day to day basis. When you as an entrepreneur are worrying about, hey, my revenue is not going fast enough, or, some a very important team member decided to leave and I'm feeling bad about it. If you start to take a long term lens and you're like, okay, it's a long journey, we're building a company here, Boom wasn't built in a day. And it's like running a marathon. You fall a couple of times, you get up, you go back running. It's okay. And that long term vantage point really helps me. Like, if you tell yourself, hey, I have a lot of time to achieve my goal, I'm not running a sprint where I have to do things in a short period of time. It just like puts things in perspective. So to me, the best advice was, hey, incorporate long-term thinking in how you make every decision. An example for that could be I could choose to kind of work with, I have two options, get a more, a cheaper option versus a more secure option. Again, depending upon the risk versus reward, in some cases, I choose the more secure option because that's a long-term right thing to do. Even like, working with customers, like thinking about, hey, my reputation compounds long-term. Short-term, it's okay if I had some losses here and there. That long-term thinking really helps.
Yes. And especially today, when I think about social media and people comparing themselves of where you are in your career, but then you realize it's long term. It's a long term. You're not chasing shining out a long term. I love it. My last question is, what is the career advice you usually give people?
I tell people to follow their gut. Lots of times young people come to me and they're like, hey, should I start a company? Should I, switch my role? I'm not enjoying marketing. Should I think of doing sales? Should I go for an MBA? Will it help? Will it help? What's going to make me more money? My advice is always say, just follow your gut. Your gut usually knows there's no like right or wrong decision. That's how I made a lot of my decisions. My gut told me to start a company. It wasn't the most logical decision to make, but it just felt right. I often advise people to follow their gut when they're stuck and not try to like over optimize. Like it's funny that day, someone called me. He's like, you know what? I've gotten admitted into Harvard Business School and Stanford. Which one do I choose? I'm like, dude, you're like one of X people who's gotten into both.
Yes.
It's like both of those decisions are going to be okay. Just like, go with, it's like, but where will I get a better job? Where do I make more money? Is Boston a better city or should I live in the Bay Area? And he was like trying to kind of, create a spreadsheet based decision making framework. So I'm like, no, that's not how you can make these decisions. Follow your gut.
Yes, yes. Oh wow. I think we have so much information these days. It's easy to get bogged down by too much information. So love that advice as well. Well, thank you so much, Apurv, for being on the show. I really enjoyed the conversation and the insight you shared.
No, it's great. Great. Thanks for having me. And, looking forward to, having more of these.
And that's it for today's episode of The Diary of a CFO. Thank you so much for tuning in. If you enjoyed the show, don't forget to like, review, subscribe, and share with others. Our website is thediaryofacfo.com. That's where you can find all the episodes, access all the guest profiles, see their bios, and the social media links. It is also the place where you can apply to be a guest on the podcast and have information about how you can sponsor the show. As always, if there is any topic you would like me to cover in the future, just email me at ask@thediaryofacfo.com. Again, the email is ask@thediaryofacfo.com. See you soon.